in importance because you are before the TV all the time, and to run the TV you need your electricity. Your essential services have gained, and primarily entertainment, and of course primarily your, I would say, online Medicare primarily, which is trying to get more leverage. So if you look at all these scenarios, why technology becomes one of the very important part here is because online shopping and robotics, technically robotic deliveries could see a lot of investments, digital and contactless payment, the fintech sector technically may get more investments. Remote working has put a new dimension to life, which technically also would bring about a lot of changes in solutions like VoIPs and many other collaborative tools and security tools and facial recognitions for security purposes may start looking at new dimensions primarily in investment interest. Distance learning is going to be definitely a way of life now. What magnitude and to what extent and what players are a different thing, but that would remain for good. Telehealth definitely, which was being looked at in a very hostile manner in the past, while telemedicine, etc., was not gaining grounds. I think it's going to be a new emerging field. Online entertainment, definitely. Your supply chain with the focus to last mile deliveries would see a very big change in investments. 3D printing in the field of manufacturing would primarily be a new area which will see a lot of, I would say, investments coming in. Robotics and drones primarily will see, because these are all new ways which primarily would be required to exist safely in the new COVID-19 environment. Because US studies are suggesting that this may remain for us for 2 years, while the vaccine may come between September and December. But we will have to learn to live very, very differently than we have historically evolved ourselves like. And of course, the last thing which we can't forget is 5G technology and information and communication technology, which may primarily also see a lot of gain in this. So looking at these factors, if you're looking at technology as one of those segments, the sector which I come from, though I'm a chartered accountant, I'm not a technical guy, but I see a lot of focus getting into the technological sectors like artificial intelligence, machine learning, robotics, virtual reality and augmented reality, cyber security, blockchain technology, and IoT, of course, would see a lot of investments coming in into India, not only from the Indian corporates, but also from the European and I guess the American investors. These are the sectors which primarily will see a lot of interest to my view.
Okay.
So now returning back to the 6 basic questions I said that are usually asked by investors in determining the investability, is they look at is the profile of the founders, the team quality primarily.
Okay.
The team quality that will remain. So nothing is going to change in terms of what they look at in terms of investability while they're evaluating it slightly later, and these are all purely my own perceptions I'm talking about here. So team quality will still remain a very, very large focus. They would look for founders who primarily are intelligent, who technically can see through the clouds, people who can move, nimble investors who can look and act fast was primarily what they would look at. They would definitely look at the principles you may have read as TAM or SAM or SOMs, which you call it, total addressable markets or serviceable addressable markets, or I would say whether the SOM is equal to SAM or SOM is greater than SAM. These concepts would remain. Strength of the technology, as I the silver line would be one of the very strong evaluation factors. Traction definitely would be one of the factors they look at in terms of what the product traction could be. Timing and trend, here would also make a difference. And timing will get impacted by definitely COVID-19, and of course the term sheets as well, because terms are going to become more and more difficult as we go forward. So these are primarily what I said, six basic fundamentals which have determined investment, and they would continue to my view, determine the investments in future too.
Okay.
I hope I'm audible.
Yeah, sir. Yeah, you are audible, sir.
And I also would like to check if I'm on the right track in terms of addressing what you would
Perfect.
like to hear.
Perfect, sir. Perfect. Just your camera. If camera view can be put down, sir, because your only half face is visible.
Okay.
Yeah, yeah. It's perfect now. It's
This is
perfect.
better?
Yeah, yeah. It's perfect now, sir.
Perfectly fine.
Okay. So,
So,
yeah,
yeah.
yeah. Continue. You continue. Then we will ask the questions later on.
No, you could ask as we move forward. I'll try and answer if you have something till now.
So, what I was feeling that with COVID-19 now has finally arrived in our life, in all our lives. What I feel that from now onwards, what we used to see 2019 and previous years, there were lot many investment which made the companies unicorn very easily. There were many companies which were coming up and becoming unicorn pretty easily. But now I feel that with this, there will be a lot less number of companies who are going to get that much of funding that will make their valuation to that unicorn level. Do you feel the same way, or it will still be the that way only, sir? It was before COVID.
Okay. So let me talk about the way I feel there could be certain trends which may emerge. So I understand there were a lot of people around the investments, and large investments were coming up, and the companies were burning cash and becoming unicorns based on their footprints, etc. And this definitely would have a difference. This definitely would have a difference in the post COVID-19 scenario, because this is a completely an unprecedented event as I see it. And while the fundamentals have not changed, the industry fundamentals are not suffering, unlike the 2008 crisis, where you see the fundamentals of the banking and investment sectors were challenged. Here, there is no fundamentals which are at strike or which are tryingly compromised. It's a medical emergency. So the moment you have the COVID-19 solution, the moment you have the vaccine, the way you respond to it, my understanding is the recovery is going to be fast. However, having said this, definitely that there is going to be a clear, I would say, uh, changing investor sentiment around the businesses and the business environment. Demand would slow. Discretionary spending technically would be looked at very critically and would have to be controlled. Funding rounds would be slowed down. The size of the funding rounds I would see would slow down. Forecasts would be slow and unpredictable and would be more and more less reliable.
Okay.
So primarily investment circles would also want to wait and watch. They also do not know how to react, how things will evolve, what is the kind of unpredictability they are dealing with. Is it a 3-month scenario they're dealing with? There is a 9-month scenario or a 2-year scenario. But everybody wants to wait and watch. Supply chain, definitely the B2B supply chain is going to have to evolve very differently. So the lack of certainty definitely will dampen the investment scenarios. I won't say stop, but definitely. The stock market, as you see, primarily is at the 25% or a 30% drop already, with the Nifty, I think, at about 9,000 level, 9,300 level. And there's further risk that it may drop down to even 7,500, though they are all predictions. No one can say whether it would really happen or not. And even HNI investments, which is considered to be the best for the angel investments, they are restructuring themselves because their portfolios primarily have suffered significantly. And also, the investment circles are also trying to gather information and digest information as far as I understand. They are trying to conserve capital at this point in time. And my personal perception is that in place of investing their money into new investments, they may go ahead and invest in their existing portfolios to protect their earlier spending. One, the scenarios will be more predictable to them. They know those investments pretty well. They know the founders. They already have invested in the earlier rounds, and their interest would be to protect those portfolios rather than going to a new portfolio. But definitely, investment size would be cut down. As I said, there would be generally a weaker venture funding environment as we would see in the next 6 months.
Okay.
And this is true for early investment, and this could be true also for late stage investments or the later funding rounds, series B, C, D, and E as we call them. Investment decisions would be slow primarily. So people will take more time to take those decisions. They would get postponed. Finance rounds would be delayed and postponed. Term sheets would become more complicated, diligent. People will try existing deals which are under negotiations. People may want to back out, quoting force majeures. And there could be a possibility that venture debt funds may be looked at in place of equity. People would look at venture debt and not equity. So definitely, as you said, investment going in and quickly moving into an icon without really very strong unit metrics fundamentals, this is for a change. Himanshuji, I personally feel this would change.
Yes.
And companies which have very strong unit metrics fundamentals, which can conserve capital, companies which technically can, well, one phrase that people say is cockroach tendency, that you can technically conserve your cash and energy. And second is you can suddenly grow very fast the moment the economy opens.
So what is that cockroach saying, sir?
The cockroach is fundamentally said to be surviving even if the world comes to an end, because that is the one creature who primarily can conserve energy. Okay. So what you're saying, organizations would have to conserve their capital and resources. They would have to reduce their cash burns to the minimum possible levels. They would have to reorganize their human resources. They would have to resort to retrenchments. They would have to resort to, I would say, pay cuts. They would have to very critically look at the quality of their team size or team quality. They would have to look for people who technically can take load off the founders, who primarily then go out, reaching out for more business and value rather than maintenance employees. So these things would definitely, so cockroach tendency, when I say, is a tendency which is to conserve capital like crazy and also be able to act fast when the economy opens up. These are two factors they would look at if you're looking at primarily. But having said so, it is also believed that some of the very large investments have happened in the past also during the crisis times. If you look at Facebook, that came up during the major economic crisis. So when you talk about icons, I would say you would also see a lot of market consolidation happening at this time. Companies which are running with fundamentals of high cash burn and large footprints primarily may not be having very good unit metrics indices with them. They might look at mergers and acquisitions.
Okay.
That would be the way of life for them to basically survive. So in place of primarily looking for competition or surviving in competition, they may combine their capitals. So mergers and acquisitions would basically do consolidation and make people look at primarily the new scenarios.
Okay.
Because getting funding would be very difficult. Bridge rounds would come with very difficult terms and conditions. Valuations would drop So what you could raise by liquidating 10% may not even come for liquidating 40%. So not the best time for raising equity at this time. So consolidations and would definitely be a new buzzword. Having said so, companies like TCS, Infosys, and Wipro, who are set to have, I don't know what the number I read was $13 billion of reserves, cash reserves. Those are the companies which would be out for shopping because they would look for strategic gains,
Yeah.
market access, and more importantly, acquiring patent-led products.
Okay.
So while I also believe that it is not the large which is going to eat the small, it is the fast which is going to eat the slow. That's going to be the new way of life in the emerging market. But still, cash is king, and cash-rich companies definitely would survive through this crisis and would have larger to contribute. But it may also evolve that the state governments and the central government may also look at subsidiaries or other small companies and startups to bring about a change. And that's what we hear more in the European and the US economy.
So there are a few questions coming up. One of our faculty, Dr. Ranjana Sharma, wished to ask a question. You can ask, ma'am. Hello,
Yes, yes.
Dr. Ranjana.
Yes, sir.
Yeah, you can ask the question.
Okay, sir, actually, I just wanted to know about the present scenario, how we can get our investment more profitable. Means where should we have to invest our money in these scenario, in the present scenarios, COVID-19?
You're asking as an investor or are you asking as an industry member?
As a investor.
So if you look at the industry member, as I think I touched upon it briefly also, the what is needed by the industry at this time is one, not panic.
Okay.
First of all, please do not panic. Minimize your variable cost and cash burn. Buy time. Buy time and use this time to build fresh revenue lines.
Okay.
I would assume reduce your carrying cost. If you have inventory, please reduce, liquidate as fast as you can, reduce your carrying cost. Please very, very critically look at your team quality. You must only carry people who can take the load off the founders. Don't carry generalists. Look for employees who can add to productivity and revenue.
Yes.
You may have to look at extreme focus on your milestones, I would say. What is the next milestone you have to achieve? You have to have extreme focus on your app. And last of all, I would say is please go ahead and reassert the value of your product over and over again to your clients. And not only reassert the value of your product, what you bring on the table, but try and adapt your product to add more value. My own belief is even philanthropy, you see, people who will survive is who can do philanthropy also profitably. So you have to act very differently to survive. Sectors, as I said, everybody says go to the fundamental sectors of media, electronics, IT, food grains, logistics. Those are the sectors technically. Yes, but the life would eventually come to normal. If vaccine comes up, it is not that the normal life would not come up and you should dump your original ideas. Innovation definitely would keep playing a role, ma'am. I hope I could answer your question.
Yes, sir. Okay. Yes, sir. Yes, definitely.
So one student of mine, Nisha Saxena, wished to ask a question.
Yeah.
Nisha, you can go ahead. Yeah, Nisha.
Yeah, hello. Good afternoon, sir.
Very good afternoon.
First of all, I express my sincere gratitude that you took your time out and actually had a session with us. So my questions are actually, I want to ask that since we have seen that aviation industry has worstly suffered due to COVID-19. So what is your stance on how actually it will rebound post COVID-19?
See, there are two ways you could answer this question. Definitely, airlines industry has been very, very badly and adversely affected. One is definitely you would see consolidation in the industry. And there is a reverse trend of deglobalization that you look at in that segment, and a lot of regional niche opportunities would emerge. So I definitely believe that yes, this industry would suffer, travel would reduce. Uh, Even the corporations which were doing certain conferences and meetings technically in a personal manner have got habituated to do the certain work remotely, so it would continue. People would be scared to travel for the next 6 months, 8 months, 9 months, even after the vaccines would come. The occupancies may have to be very, very low, considering that social distancing has to be met. You have to basically sit across in the aircrafts which are like on a diagonal opposite seats, etc., etc. But the sector would have to revive. The globalization, there could be a few reverse trends, but it can't be that the globalization would come to an end. My personal belief is even tourism and hotel industry would survive. The way the people would react to it, the way they would operate in this environment could be slightly different, but it definitely would survive. It would revive. It may take long. As I said, it may see very, very difficult financing rounds. Employees would see a lot of retrenchment in those sectors, but it eventually would survive. You can't really, the way the human being or other human race has got evolved in the current scenario is you consume goods and services from across the world. So
All right, sir.
it's not going to be eliminated from the globe of the, or rather from the face of the earth.
Okay, sir. So one more question is from my side. Slightly different from the track. I would like to ask, likewise, we see market of different European countries, US markets, or all of the markets. They have actually an impact over the Indian market. So if something changes in the US, it directly impacts our nation. If something happens at EU, it certainly impacts our nation, no doubt. So what do you think actually when our country will be in a position that our slightest changes in our policy or our slightest differences or something that actually will impact their developed markets? So what do you think that which industries need to be, get more immune system or more immunity? They need to get boosted up. So what is your stance on it?
Okay, a beautiful question. As I said, in the current economic trend, there definitely would be reverse globalization, and a lot of countries would now have regional solutions around a lot of problems. But interdependencies of the economies would not completely go away. China, for instance, as we see, is getting isolated. There is a huge economic war that seems to be emerging between China and the US, which would have the impact on the entire globe, technically is being feared. India technically has changed its global policy effective 17th of, I guess, April 2020, wherein they have changed the FDI policy of 27, saying that in all countries which have land borders with India technically would not be able to invest in India without the intervention of the government. Now, these could be very populist decisions where we have to prove ourselves against China. But the fact remains is it's going to have a very, very adverse trend. India does not have the capital it requires. There's a lot of capital which flows from China into India on the technology sector, if I correctly understand. And very, very large investments have come from China in a big unicorns as we hear about. Um, so those and companies primarily would suffer on that account because government approvals, if you talk about, uh, cannot be as fast if it has to go through. And all this came up because I think HDFC investment came from Bank of China recently. And certain companies like Oyo, Paytm, Zomato, Big Baskets, they have investments from there. Now, for going to European and the US market, even today, if you see, there is a direct link which you see on the sentiments of your Nifty and Sensex, the way the US market moves. Dow Jones pleaded on Friday, and you had 600 points going down on the Indian market yesterday. On a single day loss of 600 points, 550 points on Nifty is something unheard of. So those dependencies would remain as we would go. I don't think so. They're going to go away so easily. And we are part of the emerging world. India is a part of an emerging economy. We definitely would have a very large impact the moment things change in the US or the European economies.
Nisha, is it okay?
And they would be far ahead on the research on certain matters than us. I hope I could answer your question, Nisha.
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 Nisha. Yeah. Sir, one of our faculty, she's also CA, Gunjan Arora, wish to talk to you.
Yes, Gunjanji.
Yeah, Gunjan ma'am, you can go ahead.
Good afternoon, sir. Sir, I just wanted to ask, like just you said that we need to have a different employee chain who will take off the load of the entrepreneur or or the owner of the organization.
Yeah.
But if the all employee chain is changed to such an extent, then once the situation get back to the normal after we are relieved from the effects of COVID-19 and the crisis situation, then won't there be any problems in the entrepreneurs would face themselves that they are like two steps back, find themselves in a two-step backward situation to again get back to the same employee force and recruiting the same level of expertise like how they could have been working in the present scenario once we like are resolved from the COVID-19 situation?
Gunjan, yes, a very, very relevant question, which primarily every entrepreneur and every founder and every management team is confronted with. See, my own belief is economy and philosophy does not go hand in hand. While philosophy teaches about certain good aspects, principles, being a good employer, best employer, continued employment, we hear the government saying maintain your employment, keep paying salaries. And I'm not advocating anything against that. Organization which has the bandwidth to do so, has the cash flows to do so, should continue doing that. They have to find measures to retain their employee. They have to find measures to continue employing their workforce as much as possible, because it is one of the key essentials of an organization. They're just not people. They are one of the biggest assets of an organization. So I'm not completely principle of fire your resources, but I'm talking purely those people, primarily organizations who are coming across a situation that they have to take those tough economic calls. The resources are very, very limited. They do not have enough cash flows. The billings have dropped down to less than 10% or maybe just eliminated. The costs continue to remain on hand. So the first question comes up is for survivability. You have to survive. You have to stay alive. Find ways to retain your workforce with partial payments or requesting them to work pro bono, or keep the communication so strong that the people see value in bringing the organization back on their 2 feet before they start demanding their own personal interest. So solution. So I'm not trying to advocate at all that fire your resources. I'm saying if you get confronted with a situation that you do not have enough resources and you have to take that hard call, you have to critically look at your team, And basically those people who take the burden of the founders, people who can add to value, to profitability and to progress, would have to find precedence of over people who are otherwise. That's about it. Everybody has a and as you said, if I said the way you have to, uh, one is the cockroach strategy where we are trying to say that conserve your energy, but the second is people have to bounce back the moment the economy opens up. So you have to stay prepared for that. You have to have your plans to bounce back. So it's a careful play, and there will be no single standard answer for all situations in all enterprises. Based on their resource levels, they may have to resort to different alternatives.
Yes. Thank you.
Uh, anyone having questions? Raise your hand, please. Yeah. So Shashank is going to ask you a question.
Yeah, Shashank.
Yeah, Shashank, you can ask. Go ahead.
Good afternoon, sir.
Very good afternoon.
And sir, as you have said in your the speeches that after the corona pandemic has been vanished of the investing rounds and the funds for the investing will decrease. And you have said, you have also quoted that the telemedicine sector is going to be on boom. And sir, as a angel investor, I would like to ask you whether after when we move towards the normalized situation, the investors and venture capitalists should invest in only in the telemedicine or medicine sector, or should they stick to their own area of interest? And as far as the investing is considered.
Okay. So there are two aspects of it. Whether they would stick to their own investment portfolios or sector investments, or and technically is, and the second question which I say is, what is kind of the investment? So investment, as I said, would get delayed.
Yes.
Investment community also is very sharp. They would technically, as I said, the criteria for investability does not change. They look for primarily sectors. They look for sectors primarily which are profitable. Definitely every investment firm would also look for it as the most profitable sectors that would emerge. So even if they do not have competence in those sectors to evaluate, I'm sure they would look at those competence to be built to quickly react, because as I personally believe, acting fast would be the way, the new buzzword in this segment. And there are a lot of opportunists also in the investment sector, and those opportunity identification would continue. So people would look for the right sector, the right founders, the right idea. So when I say the right idea or the right product, it could be cutting across different sectors. So my own belief is, of course, it has always been believed that you remain at your core competences, but people would be forced to look at sectors beyond, because they would also have to balance between safety and return on investment.
Thank you, sir.
Anyone else? Check out, sir. Okay. Yeah, just Nisha is again on. Sir, Nisha will be asking. Yeah, Nisha, you can continue.
Okay, sir. Having said that, different sectors are severely affected, and post-corona, they are to be rebound again, and they have to be optimistic in nature, no doubt. But, sir, in the context of agriculture, what do you think? Because in terms of agriculture, still, we are very, I think we are at very slow pace actually, because in agriculture there needs to be a lot more which can be actually done. So what do you think? what is how investor sentiments are going to affected with the kind of agriculture startups and the kind of beam and the kind of spark that is being ignited over here.
My own belief is that sector will attract more investment that is it attracted in the past, because it is one of those fundamental everybody has relied on even during the lockdown period. And you may see far much more technology and very systematic investment going into this sector, both from and also from the organized venture capital.
Okay, sir. Thank you so much, sir.
Okay, great.
Sir, one more question is coming from my side.
Yeah, you can
Yes,
continue.
yes.
Yes, sir. Sir, in the as we have seen since COVID-19, the market has adversely, fallen over the last weeks, and we can see actually a company named Franklin Templeton. They have actually decided to terminate their 4 or 5 debt schemes as well, which
6 of them.
yeah, 6 schemes. So which actually led investors to rush off their investments and quickly redeem their investments, as it was actually hurting their sentiments, I say. So what do you think that in these times one should not panic? Definitely, but such kind of decisions have been taken by respective companies, and how we are getting affected with this. So could you please little bit elaborate over this topic?
See, stock market predictions and debt market predictions are very difficult to make. This market depends on the risk appetite of the individuals. While the 6 debt schemes of Franklin Templeton also closed, it's being very clearly advertised that the capital of the people are safe. Those particular investment portfolios are being brought to an end because of some debt restructuring that this is happening. But stock market always has been very, very deceptive. Even the best and the most seasoned, I would say, market professionals cannot predict the way the market moves. There are market fundamentals, there are company fundamentals which have an influence. There is global economy which influences the both internal as well as the external factors keep influencing that. So definitely, as you said, one should not panic, but you have to be a very smart and a patient investor. When I say patient investor, you need to know exactly how to mitigate your risk, dividing your investment portfolios primarily between debt and equity and other kinds of investment portfolios. What should be the size of the portfolio? It will depend on technically your own risk appetite and your own need of funds in terms of when you need to retrieve, what liquidity requirements you have. So these dynamics would not change. Fundamentals of dynamics are not going to get impacted by COVID-19. So you have to be a very, very strong and shrewd investor to stay in the market and to make money in the market. Staying in the market is easy, but to make money is difficult.
Right.
And my own belief is people who are extremely agile would remain invested or would rather. So the key is how agile are you in terms of what is happening around you, and how well are you basically studying your portfolio. That's my belief.
Okay, sir. So one more question, sir, please. I would like to ask. Sir, actually, India sees a big uprise in the number of startups that it actually hosts in a year. But in a different scenario, we also see that a large chunk of startups also fails. So that is actually, we can say, they also fails. each and every year it actually happens. So what do you think, what is the common biggest mistake which is done by those startups? Even they receive funding, even they have a team structure, even they have, government aid, something, but still they are not able to manage. So what is a common pitfall you see in all those startups which actually led to their shutdown?
Lack of focus on unit metrics is what I believe is the main cause of failure. Even now, sustaining or rather surviving startups would be those who have very good unit metrics, fundamentals, and who have very strong SOPs to protect metrics. Companies which technically are there in the market, who may not have raised very good funding or may have raised funding but technically and are on also on high growth plan and funded through their operating profits, but do not have very good unit metrics, may find it very, very difficult to survive because the revenue lines have dropped. On the other side, the investments have slowed down. So where do you survive from? So you strong unit fundamental metrics around you. And any startup, of course, you have to have good founders, you have to have a good product, you have to have a nice market. All those are there, but you have to have very strong unit metrics. That's my own belief.
So what are the most important some points you will actually jot down for a strong startup? Likewise, we have some ideas, we actually present them in front of jury, we actually present them in front of different VCs, and like you, and in a reputed angel investor as well. So what actually you see, while actually someone is delivering his actually startup, he is actually telling his story, he is presenting in a way. So what actually you see while you are evaluating an startup, there should I invest or not, in those
Okay.
terms?
Okay, I think I touched upon this aspect briefly in the beginning of this, but let me just say, uh, as I said, there can be 1,000 things that an investor looks at in terms of business idea, the product, the commitment of the founders, the chances of success, what is the competitive scenario you operate in, kind of money that you can possibly make with this, how fast can you make, what is your customer profile, what is the spending capacity of your targeted customer, and what are your risk factors. So those are generally what they look for. But keeping all this in an environment in mind, if you structure your presentation or if you structure yourself in a fashion which primarily focuses on the quality of your founder team or the team with which you are trying to operate, initial team. So quality of team, their strengths, their commitments, their intelligence, their agility, that technically is judged by the investors pretty quickly. While you may want to say things, look smart, but having gone through so many investments rounds with different companies, the investing folks are very, very smart in judging the uh, team quality. So you have to come together as a very strong team primarily and project all your assets, team assets effectively. The next, what I would say is your product, your addressable market. As I think the management student say, the total addressable market, the TAM, and the SAM and the SOM. You need to very objectively bring forward that information before you, by just getting into the market because you are excited and you're hearing certain things and you think or you hear that this is a very big space. No, do your research. Do your research. Build information on your TAM. Uh, and when you start building that information, is realistically you come across a lot of information in regard to what is the real market size and what is the real competition that you have. What are the entry barriers you have? What primarily is impacting your SAM and SOM? Whether your SOM is less than your SAM or is it equal to or greater your SAM is you have to very objectively demonstrate to them your ability to analyze your information, your project your information will make a difference. So these become two. The third technically is, I'm saying, technology. Talk about any segment, whether it's agriculture or whether it is logistics today, or you talk about food industry, or you talk about healthcare industry, or you talk about manufacturing. Technology cannot be ignored, and more importance to technology is being added, and it becomes like a backbone or a lifeline to your system. So how strong are you invested in technology? Does your founder team technically have a technology expert? Are you working on your own technology IPs, or are you dependent on somebody else on your technology requirements? Definitely would make a difference in terms of them relying on your technology and putting their money in. And of course, scalability and adaptability of this technology that technically you are going for. So as I initially also spoke about, that very strong technology trends are going to emerge as we talk about. I had talked about, I think, 6 or 7 of them, calling artificial intelligence and blockchain technology, IoT, virtual reality, robotics, machine learning. These are very integrated technologies. You can't do without artificial intelligence, for all you know. If you see, today I go and search for a specific product, and within the next 10 minutes, I have 5 different messages the moment I open Facebook on the similar product. So practically, you feel encroached on your privacy, but that's what artificial intelligence. So these are things which would greatly impact your investment, or rather greatly impact the investment decisions, or likely what you get attract, and the traction of your product. How fast technically, and what is the market gap that you have identified? What is the need that you are addressing? How profitably can you address the need is one part of it, but primarily what is the need that you address will make a difference. Are you entering a saturated market, or are you entering a niche market, or are you entering a high capital intensive market, or that's why it is said that angel investment or investor technically goes to crazy ideas which have not been tested before, while the VC funds goes for more tested products. So those would continue to remain one of your aspects to bring about. So while you make your first few slides on the team quality, the next few slides on your addressable market and the product, strengths of technology, and the traction or the gap that you have identified in the market, do project also as a fifth item in terms of the timing and the trend, as to at what stage of the growth of market are you addressing yourself or entering that market. Are you at the early stage, or are you at the saturation point? And accordingly, even if you're at the saturation point, what is the difference that you're likely to make? And of course, how technically you are talking about what you're talking about in terms of risk mitigation plans and terms and conditions. So these are 5-6 categories under which anything and everything that you look can be, I would say, summed up. But if you have these 6 or 7 fundamentals, and of course, as I said, the latest is how geared up are you for the post-COVID-19. This is the 7th dimension I see coming in. So if you have these 6-7 fundamentals in your investment presentation or the portfolio that you're building up, definitely they would see value in terms of how you're putting a trust. You're likely to attract attention.
Yeah, thank you so much, sir, for the well-structured and comprehensive answer. Thank you so much, sir.
Sir, there's one question from my side. Actually, this is the question which normally these students ask me in the class, and I was not in a very good position to give that answer. many of these, the 50 of them are there, and many of them are having some brilliant ideas. So brilliant ideas on papers, and they are also working on those ideas. But on the legal formalities when it comes, so they always ask, sir, what should we do? Should we go ahead with a partnership firm, or should we go ahead with a private limited firm? What are the benefits of having those things? Or as these are pretty new chaps into this industry, what you suggest them to start with?
Himanshuji, let me talk about slightly differently rather than a direct answer here. Do you know exactly what we are incubating currently under the flagship of Panel at this point in time? The new venture that I am promoting at this point in time is called Panel. And Panel is a platform technically which is for helping students to incubate, rather students or early stage businesses to incubate.
Yeah.
And when I say incubate, I am not assisting people primarily to go ahead and develop their product. I'm trying to basically assist all those entrepreneurs who have a great product idea to basically come and work out of our infrastructure, and we provide them primarily infrastructure, IT networking, the bandwidth they require, the HR services they require, the accounting services and registrations they require, the cross-border agreements if they have to structure, the legal formalities and compliances they need to follow. This is basically we provide them primarily for money and for equity sometimes. So what I'm trying to bring here is that while even Atal Incubation Yojana that you look, or Incubation Yojana you look at, most of these yojanas are incubated or selected centers are colleges and universities, etc. So where you have a very good technical environment primarily to go and work on your product thought. But some of these aspects, as you talk about the legal framework, for instance, it becomes extremely important. The first time investor or the first time entrepreneur may not even know some of the intricacies of these, of structuring a term sheet, or maybe what the term sheet is, what should it look like, what should they negotiate and not negotiate. At that point in time, they technically are so desperate for funds, they can possibly write to anything that and everything. You can liquidate 80% of equity to an angel investor. So these can become extremely, and law firms could be extremely expensive. Lakshmi Kumaran and JS Sagar, these can be extremely difficult to go and afford. So small and mid-sized companies you should go for, but there are a lot of now incubation platforms, as I said. I was not trying to promote Panel, but I said there could be a lot of incubations platforms which have emerged, which technically are providing these legal assistance to their clients. I can talk about a US company I was reading about called Atomic. Go and read on that. They provide everything to the new investor or a new entrepreneur or a startup company other than the product idea. And one of the things which are in deficit at the time of an early stage startup is money. You don't have the money to invest in these things. Of course, lack of experiences, but you don't have the money. So some of this could come for equity as well. So like companies like Atomic do it for equity. So they become your equity partner and they help you steer yourself technically through these clouds or inexperiences while you are at the early stage. I don't know whether I've been able to answer your questions, but naming a particular law firm to whom to go to,
not exactly going to the law firm, but exactly if they are going, like they are starting their own startup, so how they should register. I mean, they should go initially with a partnership firm, or they should go with a this private limited firm. Which one is better for a startup firm? Or, and one more question which they ask is, angel investor or investors look differently on to a company if it's a partnership firm or if it's a private limited firm?
My experience is that a private limited company attracts more availability from structured investment groups
Yeah.
because of the level of transparency that it provides statutorily. So, and if you are trying to incubate to become a scalable and a large organization, you should know the nuances, you should know the complexities of of managing a private limited company. While LLP is one form, I would not discourage you from doing a partnership, but eventually I have seen that you have to transition to a private limited company eventually when you get into the hands of structured uh, investment, and this may become a precondition before you primarily at the time investment starts to look at you formally. And I personally am a believer that when you form these companies, be extremely honest and forthwith with your style and nature of functioning. Your equity or your shareholders should be shareholders. I become a shareholder, and then I make my peon as another shareholder, and then I make the third as my office clerk as a second, who have no idea. You should avoid those kinds of things formally. Same goes for the directors. When you're appointing your directors should be people of competence, because people, when you're attracting investment, people see through these things. There's a formal due diligence process which goes through the moment you see the structured fund. So there was a point in time, the regulatory environment in India was different. You would form a company with your father or a mother who can't even read or write sometimes, or you would float a company at home or an address that doesn't exist, or you will make a director who is some. Those regulatory and or whether it's investor or whether it's a offshore investor, they all look at these things, and the transparency and the compliance aspects, the way you look at it, the way you structure yourself reflects on the, I would say, the thought process of the founders, which is either appreciated or not appreciated by the investors.
Thank you.
Okay, sir. Sir,
Yeah,
what is the your one piece advice to the young budding minds like us? What would you like to actually give your one piece of advice to us?
Mhm. At this point in time, if you ask me, the only advice I will give you in the
Stay
current
home, stay safe.
I would say look after yourself twice as much as you would in a normal circumstance.
But from a professional, glance, what would you like to say?
Become, I would say, I was referring to become an agile founder, become a well informed investor, or rather a founder. If you want to start your own venture, read enough, know what is happening around you, and keep yourself pretty updated.
Yeah, thank you so much, sir. Thank you so much.
Mukul sir, we are almost at the end of this session, but one of the student has just raised the hand, so I'm putting her mic on. As her name is Harshita.
Yes, Harshita.
1 minute, sir. Yeah, Harshita, go on.
Good afternoon, sir. Uh, so I would like to ask one question regarding the investment part from government. So MSME is the one of the schemes of government. So what do you think? What will happen to the government scheme that of giving the investment and loans to the startups after the COVID-19?
See, as far as US and European economies are concerned, they're really going ahead and supporting the MSME investment plans. And I don't think so India would be very different. Our Honorable Prime Minister is very, very actively working towards ensuring that we become regionally self-compliant. So while I do believe that some of the very, very large companies like TCS, Infosys, Wipro, and Reliance will be contributing towards the expansion and growth, but MSME segment, the startup segment will definitely be a very, very big contributor. Innovation will continue to attract attention of the government. You have to just do the things right. There could be certain frustrating processes in the as you go across in terms of selection criteria, in terms of application criteria, but I tell you the intent is very right. So I believe, and I strongly believe, that if you are an agile fighter, understand how things, it should work for you, and the government would probably invest much more than it has done in the past in this segment. That's my personal belief.
Okay, sir. Thank you, sir.
Uh, Mukul sir, first of all, because it's almost we are coming to an end of our session. It's more than 1 hour. We have taken your more than 1 hour, and it's, from the DBS family, Doon Business School family. From the very deep heart, I want to thank you a lot that you took us such a precious time of yours and came ahead and take a session with my students. It would have been much better if you would have a live session in the college itself with you there present in the college. That would have been a much better session. But I guess in the current scenario, this technology is at least helping us do something. And people like you can actually impart much more learning than we people sitting in the college, because you are there in the industry and you can give the best of the best insight what's happening in the industry, and these students can learn much more than what we taught them in the classes and other things. So thank you very much, sir, and we wish to see you again whenever you will have time. Much better if you have a face-to-face session in the college itself. If you would have some time, we would love to invite you to the college itself. So
I must rather thank you, Himanshu, for giving me this platform to speak. I'm a public shy person. I don't usually do this, but I couldn't really say no when you put up this request, and I hope I've been able to answer the questions or rather meet the expectations.
yes, sir.
I definitely would. I don't think so. Next 1 month we would be able to travel to Dehradun. I live out of Delhi, but I do spend a lot of considerable time in Dehradun. So definitely, let's find an opportunity, meet and see whatever we can do for this emerging world.
Yes, sir.
Young entrepreneurs, actually, there's a lot to learn from.
Yeah.
More than telling them, there's lots to learn from them.
Sir. And there are pretty smart business ideas these people are having, and I would love to have a session where these people can actually put forward their ideas in front of you, so that you can actually guide them rather than just for the angel investor perspective. You can guide them that what better they can do with these ideas, and that will be a great if we can have a session at your facility itself. They can come and see what
I definitely, you could do that. I can organize a session at my office in IT Park.
Sure, sir.
And it's an open offer to any one of you who incubate an idea. If you would like to kind of work out of our facilities and would like to seek our primarily assistance in terms of helping you through the process, it would be my endeavor to put in my best to help you through. So you're free to reach out to me for anything I can do to incubate your idea.
Thank you very much, sir. Thanks a lot, sir. Okay, sir. So we are ending the session. Okay.